Sooner or later, those who win are those who think they can. We see stocks up big today, gold up, and bonds down. Now again, that quote that we gave you was from Richard Bach. Sooner or later, those who win are those who think they can. In order to get that attitude, you've got to practice. 10 to 15 minutes a day, that's all we ask. We're going to touch on where oil and where real estate and where Bitcoin is at the end, but we'll go through these charts for those who want to hear the S&P 500, the NASDAQ 100, 20-year bonds and gold first. Talk about a little bit more after, but your 10 to 15 minutes is following these four charts. Now, what do we see going on? We see the price percent oscillator flattening. Derivative oscillator topped on the weekly chart back on the week ending the 27th of March, sliding sideways and up a little bit so far. First day, we have a green spinning top. It's an open box, meaning up movement. You can see that price percent oscillator flattening after hammering down for 4 weeks and then sliding sideways for 2. We go to the 2-day chart. What do we see there? Well, things are, again, that's where you see that sideways slide. Now, check this out. Are we going to have the 2-day chart crossover going up? It's getting awfully close to that. This is just the first day of the latest 2-day candle. It's a green up candle. Does have little wick on the bottom, mostly a big wick on top. Derivative oscillator gaining momentum, price percent oscillator. It'll tell us by the close of the market tomorrow whether we have a 2-day crossover going up. Right now, of course, it's a 2-day crossover going down. Until that candle ends, we don't call it. Weekly is still in a down mood. So the market is in flux. Are we getting the bull trap setting up for us? Perhaps so. Up in the morning, further up in the afternoon, that 4-hour chart, it was passing through on Friday, and look what it did, folks. It pulled back through and bounced off. Derivative oscillator at the end of the day went positive. So again, like I said on Friday, the thing that we dislike, well, what we love in order, weekly vertical crossovers, the biggest thing we have going. That's when the trend changes on the weekly chart. Next best is the 2-day recross. And the last is the 4-hour chart, because the 4-hour chart's our smallest wave. But remember, overall wave is still down. Still a lot of down move on this market. How could there not be with everything that is going on? We'll see how the week is shaping up when we see how this candle continues to move, particularly tomorrow with that 2-day candle, whether we're going to have a recross going in the opposite direction of the weekly. So we'll see. I don't like to call that a recross, just a cross in the opposite direction. I want to use recross as a good thing. So we go to the Qs, the NASDAQ 100. Now last week, of course, we had a green spinning top. This week, green up candle. Don't see a wick on the bottom. That's what's forming so far. Price percent oscillator is about flat. Derivative oscillator losing momentum. We go from the weekly to the 2-day. First day of the latest 2-day candle. Pretty sizable green up candle crossing through quite strongly. We'll see how that continues on Tuesday. Very important to set the tone of the week. Up in the morning strong, followed by more up in the afternoon. You can see where things had pulled through and closed and then bounced right out on Monday morning. The weekend effect not working for us through this weekend, or the Monday effect. It usually does. But again, that's what keeps things interesting, isn't it, folks? You can't always call exactly what's going to occur. If you could, a machine could do this. Well, machines can't do it. And again, it's up to you to use all of the tools in your tool shed. And remember, the biggest one in the end is making sure that you understand liquidity, that you understand volatility, and that you can exit trades that are not working. And again, tomorrow is going to be telling us a lot as to where things are going for this week. That's where we are. As far as stocks go, we're back to the weekly chart going to bonds. Bonds down 0.26%. We have a red open box candle that's forming. The price percent oscillator is losing some upward momentum. Derivative oscillator continuing to lose momentum. And we again are seeing price just there on the weekly trend line. In fact, probably need to redraw that trend line a little bit better now. There we go. And so we'll continue to watch bonds. Of course, you'd expect bonds to be down some today with the stocks up as big as they were. Not down a lot, just 0.26. We look at what's happening on the 2-day chart, and you can see where it's flattening also, still negative. But again, we've got a small red candle that's forming right now, falling out from the 2-day trend line. It is below that, above the weekly. And again, that's just the first day of the latest 2-day candle. We look at that 4-hour chart, and again, we've fallen below that in the morning. A little bit of a recovery in the afternoon. Bonds really sliding sideways mostly. So we'll continue to watch. We also saw the derivative oscillator go negative at the end of the day, price percent oscillator go negative in the morning. So we'll continue to watch, see where bonds go. Sort of a not so much happening day, but really interesting that bonds didn't hammer down as stocks hammered up. So we'll continue to watch that. What about gold? We go to gold, 2.77% up, got a nice candle forming. Still, of course, haven't reached the high of highs, which was back on the, I guess, the week of the 6th. I was trying to see if it was higher the week of the 13th of March, 159.37. 159. So it was higher. It was higher the week of the 13th, Friday the 13th ending then. So 159.37, the high throughout the day, 157.22, but a big green up candle forming. And look at that. We might end the week with a weekly vertical crossover going up on gold. We've been waiting for that. That's nice to see the week start off that way. We don't call it till it happens. Of course, preceded on last Friday, this past Friday, by the 2-day crossover. That happened on Friday the 3rd. And we see that the derivative oscillator has gone positive. Nice green up candle forming. First day of this latest 2-day candle. We go to the 4-hour chart and we see it gaining momentum, heading up in the morning, further up in the afternoon. You can see how those Bollinger Bands were tightening, where things were just sliding sideways, and now things are pushing up. Hopefully we'll see gold break out and move up, have a chance to jump into it. We shall wait and we shall see. Folks, that's where we are as we finish Monday. Again, big up day. Waiting to see how Tuesday goes, if there's a pullback or if things just keep moving up strongly. We're going to let the market tell us what it is doing. Tuesday, I think, will be helpful for giving us a feeling about that. That, of course, will also be the close for this first 2-day candle of the week. So we'll be watching closely. That's where we are on our charts. We're going to take a quick look at gold. See gold pulling back. And again, weekly is still hammering down as far as the price percent oscillator goes. Derivative oscillator losing some downward momentum. Nothing much happening in gold so far this week. Down 7.41% as far as any up movement. Let me put it that way. And when we look at the initial candle, and this is showing us just average pace, it's showing that candle as far as the way our Heiken Ashi candlesticks are going. We can see that the price percent oscillator still negative, derivative oscillator gaining some upward momentum. That means that prices are increasing faster than they are decreasing, even with that down day. So don't have a crossover yet there. See more with this 4-hour chart. You can see that real sideways slide. What's pushing our oscillators are those 2 days of strong up movement in gold, and then things just sort of petering off there. So we go from from oil, so used to ending on gold. Oil just, again, not doing much of anything. We had seen that real pop up and then just sort of petering around at the beginning of the week. We go take a look at what Bitcoin's doing. Bitcoin on the weekly chart, of course, still negative. Derivative oscillator gaining downward momentum. That price percent oscillator losing a little bit, starting the week off with a green up candle, up for the day right at 4.5%. That 2-day chart shows us Again, going into the second candle with some up movement, still hasn't crossed over, going up, seems to be headed that way after, of course, a big down 2 days back on Tuesday the 17th and Wednesday the 18th, and really hasn't recovered fully from that hammer down. And then we look at the 4-hour candle, and of course it crossed over back on the afternoon of Friday the 20th, and then sort of slid sideways and trying to recover some lost ground. We'll just see how Bitcoin continues to march along, but again, some real hammering down it took over that 4-week period where the stock market started dropping actually, around that same time when the COVID-19 scare came upon us. Lastly, we'll take a look at real estate. What's going on there? We talked about that. This is, of course, Reits, Real Estate Investment Trust. This is the largest fund, and we saw it hammer down for 6 weeks and a little bit of a recovery over the prior week, not really much. And so far this week, not much going on. Up for the day, 7.41%, but still very negative on the price percent oscillator and the derivative oscillator. 2-day chart, we can see how things have just sort of been seesawing back and forth. Don't have a crossover yet on the price percent oscillator. The derivative oscillator has crossed over, so we'll continue to watch and see just how that is going. And lastly, we take a look at the 4-hour chart there. Up in the morning, little more up in the afternoon, but hasn't recovered to sort of that area where it's been topping off at around the $71 mark or so. So again, we'll continue to watch, see how these things recover, and just see what happens with real estate, what happens with Bitcoin, and what happens with oil as we continue to move along. All of them hit really hard. And again, the bright spot might be gold with that 2-day crossover that may be happening at the close of the market tomorrow on Tuesday. And again, continue to watch bonds and see how they do. They were affected a little bit today, but just 0.26% after all that up movement in stocks. What's that maybe telling us with gold going up and bonds really not being affected? It goes to show you that people are still trying to protect that hedge against the market crashing. That would be bonds and gold. Folks, that's where we are as we end the day on Monday. This is going to be a fascinating week. I can smell it. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.